check. Hey, 1 2. Check, check. Hey, check this 2. Check. Hey.
Good evening, ladies and gentlemen. I request our friends from the media to kindly be seated. Our MD and CEO, sir, and the top management team is already here. We'd like to go ahead with the program. A warm good evening to you all, ladies and gentlemen. Myself, Usha S. Kumar from Publicity and PR team of Bank of India. It gives me immense pleasure to extend a very warm welcome on behalf of Bank of India to all our friends from the media who have joined us today here in person. Additionally, a special welcome to all our friends from the press who have joined us virtually from different cities across India. We are pleased to announce Bank of India's financial results for Q4 FY26. We look forward to have an interesting session ahead. As you all can see, our top management has already graced the dais for today's press conference. It's indeed an honor and my privilege to introduce Bank of India's management team present here, which is spearheaded by our MD and CEO, Sir Shri Rajneesh Karnatak ji. He is flanked by our executive directors, Shri P.R. Rajgopal sir, Shri Subrat Kumar sir, Shri Rajiv Mishra sir, and Shri Pramod Trivedi sir. Ladies and gentlemen, we also have the presence of our other senior bank officials here today. We'll now commence the press conference. I would like to invite Shri Rajneesh Karnatak sir to address this gathering, after which we will open the question answer session. Over to you, sir.
Thank you, madam. Good evening, everyone. So, good evening, ladies and gentlemen. Thank you for joining us today on the eve of publication of our bank's financial results for FY 25-26. This year has been another significant milestone in our bank's journey, marked by resilient financial performance, significant asset quality, robust business growth, and continued commitment towards the nation building. Despite global uncertainties, geopolitical tensions in evolving interest rate cycles and the changing regulatory expectations, the Indian economy has demonstrated remarkable resilience. In this backdrop, our bank has continued to play a very proactive role in supporting the economic growth and maintaining the financial stability and prudent risk management. During the year, bank has recorded healthy growth across key parameters, including deposits, advances, operating profit, and digital transactions. Our focus remained on calibrated credit growth and emphasis on quality underwriting, sectoral diversification, and responsible lending practices. My speech is in three parts today. The first part is with respect to the institutional initiatives that we have taken. The second part is with respect to the business initiatives. Third part and the final thing being the profitability and the asset quality that the bank has maintained. On the institutional initiatives, the bank is establishing zonal collection deposit centers at the zonal offices to accelerate the CASA accretion and its market share. This initiative is designed to ensure long-term retail stability, to foster deeper and more meaningful customer relationships as far as the resources are concerned. The bank has integrated the Umang app, which is a Government of India app, with our own Bank of India Omni Neo platform, creating a one-stop digital solution for the wide range of central and state government services. This strategic partnership with the National E-Governance Division allows our customers to conveniently access essential public services through a streamlined redirection of model directly with our banking applications. The third part is with respect to the bank has launched the Bharat Connect Biller operating services, enabling corporate customers to onboard themselves to the billers and offer their customers diverse digital payment options and solutions. This initiative enhances digital reach and streamlines the collection processes, enabling a more convenient and efficient payment experience for all the stakeholders. The bank has established dedicated MSME desk helplines also to address the borrowers' concern directly. This initiative facilitates the structured, regular interaction, enhancing the transparent and responsive grievance redressal mechanism for our MSME partners. The second part with respect to the business, the global business has grown by 14.57% on a YOY basis from 14.83 lakh crores in March 25 to 16.98 lakh crores in March 26 with the incremental growth of 2.16 lakh crores. The global deposits have increased by 13.56% on a YOY basis from 8.17 lakh crores in March 25 to 9.27 lakh crores in March 26 with an incremental growth of 1.1 lakh crores. The deposits increased by 14.30% YOY basis, which is domestic deposits, from 7 lakh crores in March 25 to 8 lakh crores as on March 26. CASA has increased on a YOY basis from 2.8 lakh crores to 3.01 lakh crores in FY26 with the incremental growth of more than 20,000 crores in March 26, and the CASA ratio stands at 37.64%. Global gross advances have increased by 15.82% on a YOY basis from 6.66 lakh crores in March 25 to 7.71 lakh crores in March 26 with an incremental growth of 1.05 lakh crores. Domestic gross advances have increased by 16.10 lakh crores on a YOY basis from 5.64 lakh crores in March 25 to 6.54 lakh crores in March 26. RAM advances have also increased by 19.11% on a YOY basis from 3.23 lakh crores in March 26 to 3.84 lakh crores in March 26, constituting 56.74% of the advances as on March 26. As regards the profitability and the asset quality is concerned, operating profit has increased by 4% on a YOY basis and stood at more than 17,000 crores for FY26 as against 16,400 crores in FY25, and for Q4 26 stood at rupees 5,026 crore with a YOY growth of nearly 3%. Net profit has increased by 14% on a YOY basis and stood at 10,527 crores for FY26 as against 9,219 crores in FY25, and for Q4 FY26 stood at 3,016 crores, witnessing a YOY growth of nearly 15%. Net interest income has increased by 3% on a YOY basis and stood at 25,172 crores for FY26 as against 24,394 crores in FY25, and rupees for Q4 26 stood at 6,630 crores as against 6,063 crores in Q4 FY25. The non-interest income has increased by 10% on a YOY basis and stood at 9,874 crores for FY26 as against 5,994 crores in FY25. Global NIM has stood at 2.52% as against 2.82% in FY25. Slippage ratio stood at 0.83% in FY26 as against 1.36% in FY25. Credit cost has improved to 0.48% in FY26 as against 0.76% in FY25. There has been an improvement in the asset quality with reduction in both gross NPA ratio and net NPA ratio. The gross NPA ratio has improved by 129 basis points on a YOY basis to 1.98% only in FY26, and net NPA has improved by 26 basis points on a YOY basis to 0.56% in FY26. The provision coverage ratio, which we call the PCR, has improved to 93.57% in March 26 as against 92.39% in March 25. As on 31/3/26, bank CRAR has improved to 18.01% from 17.09% in 31/3/2025. In alignment with the prevailing global economic conditions and guidance for the global advances growth will be at around 15 to 16% for FY27, and the global deposit rate guidance shall be at around 13 to 14%. The bank's primary focus will be on strengthening its deposit franchise and a higher share in low-cost funds while driving growth in high-yielding advances to support the margins. Additionally, focused efforts on maintaining the balanced CD ratio and enhancing the return on assets with drive stronger financial performance. Investment in digital infrastructure and cyber security will continue to enhance our efficiency and resilience in the bank. Together, these actions will enable measured expansion for the business and reinforce the long-term value creation for all our stakeholders. The detailed annual report being released will provide comprehensive insight into the bank's financial performance, strategic direction, and the governance practices and the future outlook from our side. I would like to thank you all for your continued support. The floor is now open for questions and answers. Thank you once again and namaskar. Thank you.
Thank you very much, sir. Yeah, I can see the hands raising. Let me make some mandatory announcements first. The person desirous of asking a question may please raise your hand so that a mic can be passed on to you. We shall appreciate if you could introduce yourself and the name of your organization before putting up the question. Also, we would like to mention it here in a sincere request that it being our annual financial result, a lot of online presence is also there. So we request you to kindly restrict your questions to two per person so that others may also get an opportunity to interact with our management team. We'll come back to you later for sure for subsequent questions if time permits. An announcement for the friends who have logged in online. Please send in your questions to Ms. Neha Chavan of Concept PR via WhatsApp on 8879040248. I repeat, 8879040248, so that questions can be asked on your behalf. So we may start now. The first hand was from the lady in black. Yes. You have to be more audible.
The mic is not working.
Yeah, I'm Shreya Jagdishan from Dead Circle. So my question is about around a week ago, Bank of India announced 7,500 crore of bond issuance, right? Yeah.
Yes.
So what timeline has been set for the same? And given the current circumstances, what kind of coupon rate can we expect? And do we expect more bond issuances this year from you?
Thank you so much for the question. So, board has approved the bond issuance of around 7,500 crores in this financial year FY27. With the present situation which is there, global scenario, we are today already on 8th of August. I don't think we'll be raising any of these bonds in the Q1 of this financial year. But definitely going forward, we'll be raising most likely in the Q2 and Q3 of this financial year, we'll be raising the bonds. This present approval from the board we have taken for 7,500 crores, which includes Tier 1 of around 2,500 crores and Tier 2 of around 5,000 crores. So as regards further raising of that, we'll take a view only after the half year is completed. Thank you.
Thank you very much. Mr. Ankur, yes. Kindly pass on the mic, please. There can be two persons, one on this side and one on the other.
Thank you for the opportunity. I'm Ankur Mishra from ET Now. First of all, congratulations for the wonderful quarter. You have given guidance on loan growth as well as deposits. I want to understand about the NIMs as well. How do you see the repricing? First of all, if you can clarify that if it is over and how much of the impact was there on the NIMs in this quarter. And in FY27, you think the trajectory can be better than this?
Yeah, thank you so much, Ankur, for this question. Very important thing, which is about the NIMs. As far as the repricing is concerned, just to give you a heads up on the data which we have. So if you see our presentation also, we have more than 4 trillion rupees of term deposits which are there. out of which if you see the term deposits on the retail term deposit sides, they are nearly 2.2 lakh crores. So that is the retail term deposit that the bank is having. If I give you a sense what is the duration of that, the average weighted duration of these retail term deposits is 25 months, which is nearly 2 years, 1 month. So the first, the cut cycle which happened from the RBI side on the repo started, if you remember, in January 2025. So today when we are in May 2026, we are still at around 14-15 months only after to that. So 25 months from that concludes somewhere in the month of February 2027. So the repricing of the deposit is still going on as far as the banks are concerned. This is not only for our bank, but also for the other banks also. So we are, since, as I said, that 25 months of the, which is the weighted average tenor of these deposits, particularly the retail term deposit, the pricing will continue to happen. And as the months move on, definitely our cost of deposit will be coming down, number one, from the existing deposits, because they will be getting repriced. As far as the NIM is concerned, you must have seen from the presentation that we have reported a NIM of 2.52, which has come down by nearly 30 basis point on a YOY basis. As far as the NIM is concerned, there are two components in that. If you see our composition of our balance sheet, nearly 14% of our book is in the international book, and the remaining 86% of the book is the domestic book. If we see the international book, there obviously the NIM is much finer. So in the international book, the play of the NIMs are somewhere around 1.2% to 1.3%. That is the range, because of which the global NIM comes down. But the domestic NIM is much higher. As far as the way forward is concerned, to the NIMs is concerned, we expect that we are taking a lot of measures in this financial year for improving the NIMs. One is that we are trying to reduce our cost of deposits, number one, which is as a strategy by increasing our CASA, and number two, also by increasing our retail term deposits. Number two, we are also trying to increase our yield on advances, particularly with respect of more MCLR advances, number one, more of advances on the RAM side, which is retail, agriculture and MSME, wherein the margins are much better. And number two, also improving our mid-corporate or our advances through our emerging corporate credit branches. So that is another strategy we are trying to do for improving the net interest income and the net interest margins as far as these are concerned. Apart from that, we have also are strengthening our zonal collection centers so that the fresh slippages are much lower, so that whatever the advances are there, they are performing advances and they contribute to the income of the bank, interest income to the bank. So that is another step that we are trying to take. All these things together, strategies taken together, we will be trying to improve our NIMs. And as far as the guidance to the NIM is concerned, that we expect, in spite of these global headwinds which are there, tightening interest rate scenario which is there, some inflation also which is expected, it is there. If you are aware, you must be already aware that the 10-year GSEC is also hovering at around 6.95, 6.96 levels. And presently, if we see the term deposit rates, for a 1-year bulk deposit, we are getting at more than 7%. Having said that, with all the headwinds being also there, we would say that the NIM guidance should be somewhere around 2.70 to 2.75% global NIM for FY27.
Also, when you're saying 15 to 16% credit growth, which are the pockets or sectors you think the growth will be visible? You already mentioned about the mid-corporate sector.
Yeah, so as far as the credit growth is concerned, so we are seeing very healthy, robust credit growth as far as our RAM advances are concerned. If you see our RAM book, we have grown by more than 19% on a YOY basis. If you see the retail book, it is growing by more than 21%, and agriculture and the MSME book is also growing by 17% plus. As far as the corporate book is concerned, there also we are seeing a growth in double digits of more than 10%. So we are seeing very robust growth as far as all the segments are concerned. International book is also growing. But as far as the specific thing is concerned, we see good growth we want to do in our RAM book, number one, and also in the MCLR linked advances, as I said, because we want to improve our margins. But as far as the specific sectors are concerned, we have a very good pipeline. To just give you understanding, our pipeline is presently at somewhere around 70,000 crores, which is the global pipeline which is there, out of which the RAM pipeline is around 15,000 crores, and the remaining pipeline is into the international book and the domestic corporate book which is there. And we have good pipelines across all sectors, including infrastructure sector, which includes road, power, and even data center which are there. And even in the emerging sectors which are there, like green energy, like solar energy and also wind energy, which is there, and also biofuel is there, and then EV vehicles are there, and then batteries are there, and also solar panels are there, manufacturing of solar panels are there. So a lot of new segments and categories are emerging under which we are also financing, and loan LRDs is also there, lease rental discounting, that is another pipeline which we see in our book. So a lot of broad-based pipeline is there, both in the corporate sector and in the RAM sector for us.
Sir, good evening.
Thank you very much.
Ma'am, this side. Last, towards the end.
Yes, please.
Yeah, Piyush from NDTV Profit.
Yeah.
Rajneesh sir, couple of questions. First is on this ECL guidelines. What is the overall provision that you have estimated that the bank will have to make to comply? Second is on the ECLGS 5.0 scheme that the government has launched. What sort of, what's the tune of loans that you can give to MSMEs? Have you estimated? Also in terms of the West Asia conflict that is happening, what impact do you see on your remittance business specifically? If you could give some guidance on these three aspects.
Yeah. So as far as your first point is concerned with respect to the ECL guidelines, see, we have already taken a lot of steps in order to get into compliant mode with respect to the ECL guidelines. We have already onboarded a Big Four for smoothing of that process. Already a team has been formed in the bank to get into that process. As far as the impact is concerned, so we are, as far as our profitability and other things are concerned, so there will not be a much impact on the ECL on the bank, for the simple reason that RBI has given a 5-year framework starting from 1st April 2027, ending in March 2032. So as far as the impact is concerned, it should be at around 0.5% on our CRAR per annum. So total impact would be 2.50%. Annual impact would be at 0.5% on an annual rate. If you see our CRAR, presently it is at 18.01% as against the regulated requirement of 11.5%. We have adequate cushion in that. As far as the profitability is concerned, you can see that there is a net profit of around 10,000 crore. If you net the dividend of around 2,000 crores, still the accretion into the net worth and the CRAR is around 8,000 crore from the profitability itself. Next year also we'll be doing something better than what we have shown in this year, the profitability. So the impact will be, as I summarize it, at around 0.50% per annum on the CRR, and the transition for the bank will be very smooth and there will be no much adverse impact as far as the ECL guidelines are concerned. On the next question with respect to the ECLGS is concerned, 5.0, which the government has announced for 2.55 lakh crores. There also, it is both for MSME and the non-MSME. MSME, as you are aware, the guarantee cover is 100%, and for non-MSME it is 90%. If you see our book, we have a very robust book in the MSME of more than 1 lakh crores, out of which nearly 45% of the outstanding is to the working capital. This ECLGS scheme is for the working capital. We are expecting that the requirement from the ECLGS will come from both the MSME borrowers and also our non-MSME borrowers. We expect that the number should be at around 10,000 to 12,000 crores for our bank. Out of that, the entire kitty of 2.55 lakh crores, because we are very confident that majority of our MSME borrowers, which have taken working capital requirement and who feel that they require additional fund, this is a very good scheme for them. And even the corporate and the mid-corporate borrowers who are banking through our 19 ECCP branches. So we expect that the takeaway would be somewhere between 10 to 12,000 crores in the ECLGS scheme which is there. The third point was with respect to another point you had, no?
Yeah, the impact of West Asia conflict
Yeah,
on
yeah.
your remittance business.
Yeah. So as far as the West Asia conflict is concerned, yes, there has been some impact as far as the remittances are concerned, and also on the supply chain side, the import and the export, because the entire the supply chain has increased. Basically, the shipments have increased both for importers and exporters, and as you are aware, the Baltic index has also increased nearly 2 to 3 times. So some impact has definitely come, and the impact has also come on the remittances side. They have what we are seeing from 28th February onwards, since the crisis has started, the remittance have slowed down a bit.
Sir,
Good
just
eve-
one last thing.
good
You
eve-
had
good evening.
one second.
Kindly.
One question. You had led the 12 bipartite settlement committee in terms of IBA. The 13 bipartite settlement is coming up now. Next year, government has asked to rush things. Will you be leading that committee as well? And what is the progress on that front? In terms of BOI, also have you estimated what is the sort of provision you will have to make?
No, provisions and other things, see, it is very too early to say that. See, the due date for this bipartite is November 2027. So already it is in public domain that the government has said that bank should expedite it and this process should get completed within 12 months. So we'll be initiating the process through the IBA. Whether I would lead or not, it's the prerogative of the IBA to decide. The last time I was part of that. So let's see what happens. As far as the provisions are concerned, presently we are providing the provisions as far as the PLIs are concerned. Bipartite, once we get into that and once we know what are the percentages coming, only then we can comment on that.
Good evening.
Thank you, thank you.
Good evening.
You had raised your hand.
Good
the
evening,
second. Kindly.
Good evening.
Kindly pass on the mic. Sir, we'll come back to you. We'll come to you.
Good evening.
Let us give some chance to the lady.
Yes.
Yes, please.
Good evening, MD sir. I'm Mehul Dani from FinTech Biz News. What was the increase in the technology capex for the last FY, and what are the three major milestones achieved through it? And are there any new digital initiatives planned for the current FY as part of the digital transformation journey? Thank you.
Yeah, thank you so much. So as far as the IT expenditure is concerned, so we have allocated an expenditure of nearly 2,000 crores for IT. This is for IT, for digital banking and also for the cyber security, out of which, to my understanding, nearly we have spent more than 80% of the budgeted expenditure which was there, both in the CAPEX and the OPEX. As far as that is concerned, we have spent a significant amount of money on the cyber security also. Nearly 9% of that total allocation was also to the cyber security, out of which we were able to spend at around somewhere around 80% of that budgeted amount in the cyber security also. For the next year also, considering the various threats which are coming in the cyber security, which is there in the public domain, we are planning to increase the cyber security budget in the IT by another 25%. So various initiatives have been taken on the IT side. We have a lot of projects which are running in the IT which we are spending. So one project is our project Aditya, which is on the data lake side, which is on the entire artificial intelligence piece which is there. So a lot of use case scenarios have started coming, not only for the business departments, which is our liability side business department, asset side business department, and also wealth management, but also the alerts, the artificial intelligence alerts are also coming for credit monitoring, fraud monitoring, early warning signals, and also the early warning things which are coming, they are getting streamlined into the fraud monitoring alerts also. So all these things are getting encompassed under the artificial intelligence, machine learning and the data lake project that we are having through our Star Aditya. Another project that we are having is through the Big Four is with respect to our Tech Next project, in which we are transforming the entire IT landscape of the bank, IT architecture of the bank, the digital architecture of the bank, and also the cyber security framework of the bank. There also a lot of work is happening and lot of automation is happening. Just to give you a sense, many processes we have automated in the bank. Presently the automated processes are more than 30 which we have done, and we have saved nearly 8,500 working hours out of those processes, and it's a huge number for us. And the operational efficiencies we are now able to get out of the money that we are spending on the IT platform, apart from these things. And then 29 processes on the, let me also clarify to you that, submit to you that 29 journeys we have already started from our asset and liability side products which are there. Apart from that, we have 5 journeys on the wealth management side which are also automated and which are digital now. So a lot of automation is happening, and today as on date when we speak as on 31st March, 19% of our sanctions which happened in FY26 were digital sanctions. So that kind of outcomes which we are receiving as far as the digital is concerned, and we are very confident that whatever we are spending on the digital space, IT space, digital and the cyber security space, we are making a very strong and robust bank as far as the tech platform is concerned. Thank you.
Thank you, sir. You may take. Kindly pass on the mic, Mehul. You were having, no, yes.
Thank you. So first question on the
Introduction.
Hi, I'm Shrishti from ETBFSI. First question on the CASA levels. Compared to previous year, it's down about 3%. How would you be, mobilizing CASA? When regulators say this is, banks need to be innovative in this particular space, what would be your strategy here? Where do you see the CASA level hovering in FY27? First, this.
Yeah, yeah, you are right that yes, there is a challenge with the CASA, not only for us, but the entire banking system. There is a structural change which is happening in the economy where the funds are flowing not in CASA, but they are flowing towards the fixed deposits and other kind of wealth instruments which are there, particularly equity, mutual funds and other kinds of things, asset class, which is into real estate also and into gold also. So this is one challenge for the entire banking system which is there. So this challenge we are also facing. The percentage terms, it has come down to 37%, but if you see the numbers, absolute number, we have increased from 2,80,000 crores to 3 lakh crores of CASA. So there is a delta of nearly 20,000 crores in spite of the fact that there were huge headwinds as far as the structural change is concerned. So we have tried to maintain it, and we have a very robust strategy as far as that is concerned. We have onboarded one of the big fours in that, for that, which we call the Project Udan, and under which we are trying to take many initiatives for improving our CASA franchise. So one of them is that we have identified 1,000 HNI branches. HNI branches are which branches where the average quarterly balance is more than 5 lakhs for the customer. So these 1,000 HNI branches are dedicated, and we are focusing on them for our increasing of our CASA. Second thing is that we have opened 200 branches in FY24. We have opened another 200 branches in FY26, and we will be opening another 200 branches in this financial year, FY27. So these 200 branches each in the last 3 years, including this financial year, FY27, we are opening for garnering CASA, number one, for garnering retail term deposits, and number three, for garnering the retail, agriculture and MSME advances. So this is the entire strategy for the bank, which includes the CASA, which we have to take. Apart from that, we have also started, as I said in my speech, zonal resources center. We have started 69 zonal resources center that will also contribute to that. And then we have made lot of the journeys as far as the saving and current account is concerned digital, and smoothen the journey and improve the journeys. So that will also help in improving the digital onboarding of the saving and the current account customers. Apart from that, there have been 100 MOUs which have been signed with various government departments, central and PSU government departments and corporates, through which CASA accounts are getting opened, and we are confident that in this financial year we'll be able to have more of CASA as far as that is concerned. So a lot of things we are doing for improvement in the CASA.
Sure, thank you. I'll
Thank
have
you,
two more
Srishti.
questions. Just one more. Many of the public sector banks are, known to foray into wealth management businesses as well.
Correct.
Any new businesses on your cards for FY27, and have you set out targets for your credit card business in terms of issuance and the kind of portfolio you'd like to build for this? Thank you.
Yeah. So wealth management, as you rightly said, is our part of our clear strategy for increasing non-interest income. So we already have a subsidiary which is Bank of India Mutual Fund, through which we are selling mutual fund. It has a AUM already of around 14 to 15,000 crores. We have a subsidiary which is selling life insurance, SUD Life, which is a subsidiary along with Union Bank and also Daiichi. And then we have tie-ups with various general life insurance and health insurance companies. Apart from that, we also have a 3-in-1 account tie-up also for this demat account and trading account and the saving account. That thing is also we are having. Wealth management is a clear strategy for us. We have our subsidiary BOI Serve, which we have already engaged for feet and street for increasing our wealth management products and penetration into the market. And we want to increase our non-interest income through sale of more wealth management products, which is a clear strategy. And as far as the credit card is concerned, there also we have a tie-up with RuPay, with MasterCard and Visa, and clear targets has been given to the branches, zones and FGMs for increasing the credit card base and also increasing the outstanding as far as credit card is concerned. So every wealth management product which is there, whether it is mutual fund, insurance, life, health or credit card or demat accounts, everywhere we are giving targets, and we are working in a very strategic way to increase these numbers so that the non-interest income of the bank increases.
So what's the issuance target for credit cards?
Targets for the credit cards, Mishra ji, can you?
We are around 1.25 lakhs now. We are attempt to increase it by 3 lakhs in this coming year.
3 lakh issuance.
Yes.
Thank you.
Yes, you may go ahead.
Hi, good evening, sir. Kabir here from Infamous Media. Just two questions, sir. First one, your international book is around 1.2 trillion, and 35% of that is trade linked. So just that would be around 40,000 crores. So what would be the impact, if you can give us an amount that you're seeing on that book from the ongoing crisis? And second question pertains to Treasury, sir. The RBI net open position norms, what was the impact on your book particularly? What was the size of your NDF book at that time? And if the losses will continue in this quarter, because the date was till April 10. So will the losses continue in this quarter as well? Thank you.
Yeah. So as far as the international book is concerned, we have closed the international book at somewhere around 1.4 lakh crores, if you see in the presentation, which is 14% of the book. If you see the component within that international book, around 35% is trade finance. So it is equally distributed between domestic corporates, Indian corporates which we have funded from abroad, and then local corporates of that center, and then the trade finance. It is one-third at all the parts. So as far as the headwinds which are there because of the global crisis on the trade finance part is there, as a strategy, let me clarify to you that we are trying to bring down that book because the margins are less in trade finance. So we are trying to build more book on the Indian corporates and the local corporates. There the margins are much better. So as far as the trade credit outstanding is concerned, it has come down from the previous financial year, but this global crisis is only part of that. But as a part of strategy only, we have already decided that we have a glide path which we have given to our board, that we'll bring this trade finance book on an ongoing basis, on quarter basis, because the margins are less. So there is no impact as far as that is concerned, because the outstanding which is come down is as per the glide path we have given to our board. So we are increasing if you see the international book is growing, but it is growing because of the funding toward the domestic corporates, which are funded from our overseas centers or by local assets, which we are acquiring from there. So as far as the treasury book is concerned and the NDF part is concerned, I think, will you be able to take? Yes.
So far as this NDF book is concerned, as on 31st March, we have roughly provided around 35-36 crore. That was the amount, right? Thank you. This quarter, there will be some impact. Definitely, there will be some impact because of RBI guideline coming into it. Definitely.
Yeah.
No, at this point in time, I don't. I will come back to you.
So one portion, as Subratji has rightly said, we have already taken, which is around 30-35 crores. So remaining impact will be taking in the Q1 quarter.
Current quarter.
Yeah.
Thank you, sir, and thank you, Kabir. Yeah, Hansini. Yeah. Can someone pass the mic, please?
Thank you. Your cost of deposit is almost a little lower than even State Bank of India. Your cost of funds in whole is also very, very competitive. Have you hit the ceiling as far as cost structures are concerned? Where do you see yourself on yield? And before I put forth my question, I'd like to understand what is the difference between a home loan and a mortgage loan? How do you classify the two? In order to ensure, you've given a certain guidance for NIM. In order to ensure you maintain that NIM, would you change your composition of loans in any manner to ensure that you do a little less of mortgages or home loans, which is a 1% ROA business, and more of unsecured loans? If you could throw some light on that. I have one more question, but I'll come back to you on that.
Yeah. So as far as the home loan and mortgage loans are concerned, if you see our slide on the retail slide, which is there, retail advances. So home loans are pure home loans which are there. So the mortgage loans are those also where we are giving a top up on the home loans where the interest rate is higher. So if someone has taken a 1 CR housing loan and after 2-3 years they come for a top up because of the increase in their income, also increase in the value of the house. So when we are giving this top up, we do not classify under the home loan. It comes under the mortgage loan category where the rate of interest is also high. So that is one part of it. So rather than such borrowers taking, say, a education loan for their child or a personal loan or for any other loan which they require, they are coming to the bank for a top-up loan which is at a lower rate of interest compared to a, say, a personal loan or a education loan which is there. So that is one part. So there we are earning better rate of interest, and it is getting going to the mortgage part of the retail, not being categorized under the housing loan. That is one part. The second part is whether we will the structure our portfolio to improving the net interest margins, as you are saying, rightly saying. So as I answered earlier also, we have a strategy, clear strategy as far as our bank is concerned, that we want to grow more of MCLR advances. So if you see the RAM book, retail, agriculture and MSME, both retail and MSME are classified under the external benchmark repo rates, and the agriculture is under the MSME. So we want to grow of more of agriculture advances, not the traditional agriculture, but allied agriculture, and also mid-corporate advances, and also the MCLR linked advances which are there, so that the margins are much higher over there. That is one part which is there. And then obviously to improve the margins, as I said, we want to improve our retail franchise, particularly the CASA deposits and also the retail term deposits, so that the overall margins for the banks improve.
On the yield and cost of funds, sir, do you believe you've hit the ceiling, or there is scope to further pass on?
Yeah, so as far as the cost of funds is concerned and cost of deposit is concerned, as I said, the transmission is yet to take fully. So as I said that for our retail term deposits, our average, the tenor for them is 25 months. So a lot of repricing is yet to take place in that. So we feel that there is further scope for reducing the cost of deposit, but because of the headwinds which are there of the global crisis and the 10-year yields which are at somewhere at around 6.95, and 1-year fixed deposit, bulk deposit which we are getting now at 7%, there is a challenge which we foresee in the immediate quarter which is there. But once these things cool down and the global headwinds are over and this Gulf crisis gets over, definitely the things will cool down, and we should be able in a trajectory where the cost of deposits will start coming down.
Perfect, sir.
Hansini, can we
just
pass it on?
one last question on your corporate book, sir. You've given a good guidance on what sort of a drawdown you expect on ECLGS MSME, but have you done an assessment on where your corporate book stands should the West Asian crisis extend for a longer duration? How much of a hit you will have to take on the book? What are the sectors, what are the profiles of customers you believe would be more vulnerable to the West Asian crisis?
Yeah, we have done a detailed analysis. We have presented a note to the board also as far as the West Asia crisis is concerned. So if you see the SMA book up to March, we have been improving our SMA numbers. If you see in the slide also, our SMA numbers are only now 4,700 crores, 5 crores and above SMA. And they have been declining quarter on quarter. And we do not see any challenge as far as the stress built up is concerned over there. Presently, we are seeing only that there is a stretch in the cycle as far as the importers and exporters are concerned, and there is a delay in the supply chain which is there. So there are certain sectors which are under constraint, which are mostly the importers and exporters. To just to give you a sense that our export book is hardly 10% of our, not only even 10%, around 6 to 7,000 crores. That is the export book, and we do not see much of a challenge in many of the accounts over there. So only few accounts where they have come for extension of our packing credit or the this post shipment, they have come, but we do not foresee any challenge coming over there, and none in the corporates also at present. And but to answer your question that the stress may come, will not come now with the government already coming out with the ECLGS of 2.55 lakh crores. So that has come in the right time, at the timing has been correct, and we'll be going to our board in the next week and getting it approved. So wherever any company, whether it is a MSME or a non-MSME, which is a corporate, they feel stress or the cash flow is strained, definitely they can come and take 40% of their working capital peak of that Q4 quarter and avail that facility and tide out that present crisis which is happening.
Thank you. Yes. Please.
Hello, sir. This is Abhishek Rawal from Financial Express Futech.
Yeah.
My question is with regards to information technology. 4 quick questions. What would be, although you touched upon how automation is being implemented, but overall, what is the artificial intelligence roadmap for Bank of India going forward? As far as the usage of IT is concerned, what has been the implication of the digital initiatives on your cost to income ratio? Some numbers, if you can share on the efficiency improvements coming out of your digital initiatives. And lastly, what are some of the digital, on the digital side, what are some of the proof of concepts that you are running on next-gen technologies like AI or other technologies? Yeah, thank you, sir.
Mishra ji, will you take this?
As far you had asked 4 questions. One was the AI roadmap. Presently, the BAM, as MD Saab said, rightly said, that we have a project Aditya. This project Aditya is basically AI ML based project where we are implementing a lot of AI use cases. As of now, around 31, 32 odd use cases are there across various segments of the bank, where it is, whether it's a business underwriting process, whether it is monitoring or collections, or even mule accounts. So various areas we are already built in. We intend to take this AI use cases up to 15 this financial year. So there's a lot of activities been going on, especially the cases would be around onboarding of customers journey, credit underwriting, Gen AI use cases also would be there. We are also looking at creation of, we have created last year a resilience operating center, ROC. Now, ROC has been seeing that my system, all the systems are integrated and seen that the uptime is maintained above 99.99%. Now, with that, a lot of efficiencies are also crept in to see that my systems are up and we are able to monitor and find out if any vulnerabilities are there beforehand and take care of it. So that is where we are looking at to build up the efficiency. As far as the efficiency, because of the IT systems, MD Saab rightly said that we have saved around 8,500 man-hours. So that is one, because RPAs have been implemented in multiple places and that has helped us to do it. We are going to continuously do that because we have onboarded a continuous journey with a project called Project Next Tech, where the entire transformation of IT field is setups is going on. We are doing a lot of other transformation also in this current financial year, where huge DCDR migration activity has been carried out in the bank, where we are moving on to a grade 4 data center, type 4 data center, and where DR and DC data centers are there. We are trying to set up some solutions which will create that the vulnerabilities which are there because of the cyber attacks and other things are taken care of. We are not trying to implement solutions which are one vendor oriented solutions. So heterogeneous solutions are being implemented to wade away and see if one vendor or one application gets impacted, the other overall impact is not there to us. So a lot of proof of concepts on this. Then as far as the proof of concept was, one of them authentication of by face authentication we had done in the last digital conference which was there in last year. We had done that. We are building upon that, where we start doing a lot of face authentication to wade away the mule accounts and other accounts which are there. Multiple cases with there, but I think the bank will be coming out with good innovative products in the days to come.
Thank you.
Yeah. The Umang app, you are aware that the Umang app has multiple facilities as far as the Government of India schemes are concerned. What we have done is we have integrated that with our own mobile app. So my app user who is already there on Bank of India mobile app, once he logs in, he gets an access to the Umang app. It's an app in an app concept where all the facilities which are available in the Umang app gets available to my own customer directly. He need not go and log into the Umang app separately.
Okay, thank you. Yes, a gentleman from the extreme corner.
Sachin, this side from Economic Times. There is your CASA ratio is showing declining trend sequentially and year on year. So given this, what is the trajectory of your deposit rates going forward, and what portion of your deposits has been repriced so far, and what's your outlook on this CASA ratio? Will you see further decline in this?
So as far as the repricing of the deposit is concerned, see, we have already reduced our saving rate by nearly 25 basis points in the last 12 months. So from 2.75%, we have reduced our saving rate to 2.5%. Similarly, we have also reduced our CDR, our fixed deposit rates also over the last 12 months. that has also we have done in order to reduce the rate. So repricing has already taken place as far as the deposits is concerned, both on the term deposit side and also on the saving side. So which has helped us in reducing the cost of deposits. But of late, this crisis which has happened, this Gulf crisis which has happened, that has spiked the rates as far as the long-term rates are concerned, and the 10-year GSEC has gone up, because of which the 1-year bulk deposit is at a higher price, which is going on. But when we feel that this situation will not last long, and it will get moderated in the time to come, and we'll be able to like maintain the margins, as I said. The global margins at somewhere around 2.7% at for FY27.
So given this, banks struggle for deposits still going on, so are you comfortable with this current rate, or do you see any need to, raise rates to attract customers?
Yeah. See, as far as that is concerned, if you see our data, we have grown our total business by more than 2 lakh crores on a YOY basis. Quarterly also, if you see the data, our deposits have grown both more than the advances. So on a quarter-on-quarter basis, sequentially, our deposit has grown more than the advances, and YOY basis also our deposit has grown more than the advances. So as far as the franchise is concerned for Bank of India, we have no issues on raising deposits. There are no concerns. Only thing is that, as I said, the color of the money has changed. Instead of the CASA coming to the bank, now there are term deposits which are coming, particularly retail term deposits and the bulk deposit which is coming. So deposit is coming, resource is not a challenge, but only thing is that from CASA it has moved towards the term deposit. That is one thing which is there, which is the structural change which has happened overall in the banking system.
So you expect CASA to go further down?
Yeah, so when we are saying that we have a credit growth, expecting a credit growth of around 15 to 16% as per the guidance which we are giving, so definitely we have to raise resources for meeting that increase in the delta which is there as far as the increase in advances is concerned. So definitely if the CASA growth does not come in this financial year also, obviously we will go for the term deposits for raising the resources so that we are able to match the credit growth which is there in the system.
But in absolute terms, it may not come down. In terms of percentage to overall deposits, it may come
I am
down.
talking for the percentage terms only. Absolute, so this year also we have grown by more than 20,000 crores.
Sir, somewhat similar question has come up online from Times of India, Mayur Shetty. Major part of it you have already answered, but I'll just read it. Given that you expect deposit repricing to continue, would the MCLR also continue to come down?
Yeah. Yes, it is a function of both. See, this is a RBI formula which is the cost of deposits, basically the base of which is the cost of deposit. So definitely if the cost of deposit will come down, obviously the MCLR will also be coming down.
Thank you,
because
sir.
that is as per the RBI guidelines only.
Thank you, sir. Anyone?
You can tell him, clarify him further, saying that there will not be further impact in terms of the loan book, because MCLR as such, overall across the industry, the percentage of MCLR loans have been coming down because many of the loans get linked to repo. So naturally, there will not be a big impact in terms of even if it comes down correspondingly, because there is a decrease in the rates in the deposit. That you can clarify to Mayur.
Yes. Neha, you do the needful through WhatsApp. I'm sure Mr. Mayur must be listening to this. Yes. Anyone? Yeah, please. Kindly introduce yourself and your publication.
Hello, I'm Muskan from Debt Circle. Continuing question on the bond issuance. Given the current interest rate environment, what coupon range we are expecting from the bond issuance? Also, which are the areas going to most benefit? Is it a retail loan, corporate, or infra lending?
Yeah, so as I clarified earlier also, see, at present we have taken the board approval for this financial year for FY27 for 7,500 crore of bond issuance. As I clarified, we are already in May, so we have no plan to raise any bond in this quarter, in Q1 quarter. We'll see how the markets pan out and how this crisis, the Hormuz crisis pans out. And if we are able to see that the 10-year GSEC comes down, definitely we'll be interested in raising the bonds immediately. So we'll wait and watch and see how the rate of interest moves in the market. So that is what I can say.
Thank you.
Yeah, thank you very much. Yes, somebody, oh yes, the last.
Hello, sir. I'm Shipra from Financial Express. I just had one question. How much of your NPAs have you sold to NARCL and how much has gone to the NCLTs? Can you give any bifurcation on that? And what's the strategy in terms of asset quality also, if you can?
So, yeah. So NARCL, so not much of asset has gone to the NARCL in this financial year. NCLT, there were certain accounts which were referred to the NCLT. So do we have that data of NCLT?
Yeah, data is there, no? We can share subsequently, sir. That is not an issue.
We will share that data, exact data to you. On the asset quality, as you see that our gross NPA, it has now come down to 1.98%. Right, which we are below 2% now, right. And as far as the net NPA is concerned, we are just above 0.5%. Right. So as far as the asset quality is concerned, we have, and even our credit cost and slippage ratio both have come down. If you see the fresh slippages side, there also the fresh slippage was much lower than the fresh slippages which had happened in the last financial year, and the recovery also, gross cash recovery also has improved in this financial year, and the percentage to the fresh slippage to the gross cash recovery, it has gone to 1.3x as against 1.1x last year. So overall, the asset quality in the bank has improved. We have improved our SMA numbers. SMA numbers have come down significantly. The fresh slippages have come down significantly, and the recovery to the fresh slippages have also improved. So overall, the asset quality has improved significantly in this financial year for the bank.
So just one more question. What's the recovery target for the current financial year, FY27?
So this financial year, we had done a gross cash recovery of around 7,500 crore. So we are giving a guidance of around 8,500 crore of gross cash recovery in this financial year.
Thank you very much, Shipra. With this, we come to the end of this press briefing. Thank you, ladies and gentlemen, for sparing your valuable time to be with us on our big day. Thank you, MD Sir and Bank of India's management team for your valuable insights. Also want to thank our Concept PR team for their seamless coordination with the media. Thank you all, ladies and gentlemen, and have a good evening to you all.